Welcome back, dear traders. This New York session is going to be quiet. Investors dispelled fears of a bank crisis and the shift in focus to macroeconomic data. A batch of data will be followed by remarks from Fed's policymakers today. The US benchmark stock indexes rose yesterday. Notably, all three indexes added at least 15% because optimistic forecast by Micron Technology quelled concern over economic conditions. The Dow Jones climbed by 232 points or 1%. The Nasdaq jumped by 1.79%. The S&P 500 increased by 1.42% to close at 4,027 points. Futures on the major stock indexes gained 0.5 and 0.6% in the pre-market. Fresh data in unemployment claims and the US GDP brightened up sentiment, and the stock indexes clocked into gear. The S&P is expected to trade in the intraday corridor between 3,990 and 4,110 points. Wednesday was a lucky day for Wall Street. Jitters in the banking sector took a back seat, so investors again give priority to the economic calendar and prospects of the high-tech sector. The market catalyst was Micron Technology with its optimistic forecast, which aroused hopes among global investors. Micron shares surged by 7.2%, thus pushing the Nasdaq and the S&P 500 up. The semiconductor index closed 3.5% higher because the chip manufacturer came up with a rosy forecast. The company also said that artificial intelligence boosts its sales. The forecast inspired the market. Indeed, chips by Micron Technologies are used in various products around the world. If the company is optimistic about orders, economic prospects do not seem dismal. At the congressional hearings, Fed Vice Chair for Supervision Michael Barr told lawmakers that the failure of Silicon Valley Bank was entirely on its executives. So he assured investors that the crash of the banks was triggered by the inside faults, not by the global headwinds. The index of US regional banks has slumped by almost 20% since the shock in early March. Nevertheless, the S&P is on a track to close the first quarter tomorrow with a 5% monthly gain. The Nasdaq is likely to lock a 14% monthly gain. Today, futures on the US stock indexes gained ground because investors shifted focus from a waning back pause to macroeconomic data, in particular personal spending. The economic calendar is again setting the tone for markets, and the Wall Street is regaining confidence. Besides, investors are alert to the PCE price index for February, the Fed's preferable inflation barometer, to find extra clues to the Fed's agenda for further rate hikes. And the economic data released today cheered up market sentiment. The robust labor market in the United States eventually revealed long-awaited growth in jobless claims. The number of Americans who filed for unemployment benefits increased by 7,000 last week to 198,000, more than the expected 196,000. It's a good news. The bad news is that the average reading is still way below historic levels. The data of the US GDP for the fourth quarter showed that the US economy slowed down sequentially. The US gross domestic product expanded by 2.6% sequentially in the final quarter of 2022, the downtick lower than the previous estimate of 2.7. Consumer spending grew by 1% below the consensus of a 1.4% increase. Investments in the intellectual property went up, whereas investments in residential construction shrank again. The national economic output rose by 2.1%. Such data cemented optimism on Wall Street, and still the crucial metric, the PCI price index, is due tomorrow. Shares of a high-tech giants such as Microsoft, Tesla, and Amazon climbed by 0.5 and 1.5%. H&M shares jumped by 7.3% after the world's second-largest fashion retailer reported unexpectedly high operating profits from December to February, but warned that spring sales are delayed due to cold weather. Shares of a Faraday Future Intelligent Electric skyrocketed by 23% in the pre-market after the company launched manufacturing of its first Porsche electric car after a multi-month delay. Fed policymakers, including Boston Fed President Susan Collins and Minneapolis Fed President Neil Kashkari, are due to speculate today, and the markets are riveted to their remarks because waning turbulence in the banking sector could encourage a further rate hike. At the moment, the futures market suggests a 50-50 chance of a rate hike by 25 basis points into pause. Hence, any comments from Fed officials could shed light on the further policy moves. While the stock market is regaining optimism, the US dollar is extending its weakness. The US dollar has been wound down by expectations of a pause in the Fed's monetary tightening, and the US dollar index slipped by 0.3% intraday before the release of the European Union and the United States economic data. After the statistics, the index incurred more losses. The index was trading at 102 points before the opening bell, or 0.5% down. The intraday corridor for the index is seen between 101.70 and 102.70. The greenback remains under pressure because the US economy, in a tandem with the labor market, is sending signs of a slowdown. It could be the argument for the Federal Reserve to take a break. The inflation data for the European Union proves high inflationary pressure. Today, the market turned attention to the CPI for Germany, and the largest European economy remained high inflation, though its pace eased somehow. The actual CPI did not match expectations, and the annual CPI eased to 7.4%, a bit higher than the consensus of a 7.3%. The ECB looks more hawkish than the US Fed, and the ECB is widely expected to raise interest rates by another 50 basis points. Even a recent fall in energy prices cannot push inflation down as quickly as expected. The euro grew by 0.7% against the US dollar, and the pound sterling increased by 0.5%, thus pushing the US dollar index down. Still, the greenback has a fair chance to recover, and today the US currency could be propped up by Fed speakers. Tomorrow, the US dollar may find support from the PCE index. If it remains stronger than expected, the market will again bet on a further monetary tightening. The Canadian dollar is enjoying a rally over oil prices and the US dollar's weakness. The USD cut pay is trading at 1.3530 intraday, or 0.15% down. The corridor for the instrument is seen between 1.3480 and 1.3610. The loonie-like oil prices has been extending a winning streak for 4 days in a row. Crude is trading higher today because US oil inventories contracted unexpectedly last week, and oil exports from Iraq's Kurdish region were halted. Brent futures grew by 0.2% to trade at $78.44 a barrel, and WTI added 0.5%. These factors made up for the bearish sentiment triggered by smaller than expected oil output cuts in Russia in the first 3 weeks in March. Russia slashed its oil production by 300,000 barrels per day instead of half of million planned. As for the crypto market, Bitcoin failed to settle above $28,600. Today, the token could trade sideways in anticipation of the crucial US economic data, such as personal spending and the PCE index. Popular altcoins traded mixed in the pre-market but mainly in the red. Bitcoin and other crypto are showing remarkable resilience despite pressure from financial watchdogs. The crypto market is immune from tightening rules by the US government. This is proven by Bitcoin's stunning rally despite lawsuits and court proceedings. As of January 1, 2023, more than 22,000 digital currencies were recorded to the amount of almost $800 billion. But by March 29, 2023, this number increased to 23,000, worth more than $1 trillion. Interestingly, roughly 10 new tokens are introduced daily despite troubles in regulation. Bitcoin opened this year with an impressive performance. It has appreciated by 70%, now trading at about 28,400. Analysts suggest opposite outlooks. Some crypto experts predict Bitcoin trading at 100,000 or $1 million per token, but before such peaks, the price will plummet to 9,000. Even cautions, analysts insist that the worldwide recognition of crypto assets by institutional investors is clearly bullish for the crypto market. Bitcoin got stuck at 28,600 and it has to surpass resistance at 28,950 and $29,300. If it fails to settle above 28,600, the price may slide to 27,600, and the most realistic scenario is a trading flat ahead of the important reports. And that's all for today. We keep monitoring the financial market situation. Subscribe to the channel and see you online tomorrow.